Hello and welcome everyone to another lesson on super trade. Today is not basically a lesson, it's about a fact. You all are panicking that the stock market is falling and it's spiraling fall, and all the news channels and everything they are showing negative sentiments about the market, this and that. But I will tell you a fact here, and the fact is just before your eyes. This is a Nifty chart, and these yellow lines represents the highs and lows at different points in time, different periods in time. So let's figure out actually there is a crash in the market or not. Okay, so let's first take a big right this situation here. You see, in October 2013, let's take this point from here. In October 2013, the market was at around 10,000 level, and then it went up to around 12,400, 12,400, 12,350, 12,400. And that happened in a matter from 31st October 2018 to 13 February 2020. All right. So the market rose by 22%, all right, around 22, 23%. Now, if we consider the fall from that point, that is from 19th of February onwards, around February onwards, and the COVID fall, you see by how much it has fallen. This you can call it as a crash because it has fallen down by around 38, 39%. That is straight away from 12,400 around, it came down to 7,500 something, 7,560 or something approximately. So that was a fall of 38%. But after that, you see the rise in Nifty. That is, let me erase this thing here. After this point, let's see the rise in Nifty. From this point, Nifty actually rallied. Little bit of consolidation happened over here, but again it rallied, and it rallied by almost 100%. That is from 7,600 level approximately to 15,500, around 15,500 level or something. So that was a rise of 102%, and nobody asked that why Nifty is rising, because you are happy with the ride. Then again from here the Nifty fell. Let's see by how much it fell from this point. Right, it fell from this particular point by around 7.75, around 8%. And then also people were talking about market has crashed, 8% fall, market is crashed. There was panic all around like that. And then what happened after that? You see how much Nifty rose after this point. You see Nifty took a ride from here, and it rose up to by around 31% from which period to which period, from 4th May to 20th or 2021 to 20th October 2021. So you see, you have May, June, July, August, September, and let's take entire October. 6 month it rose by around by 31%. Then nobody was not questioning why Nifty was rising. All right, and everybody was again predicting market will fall, it's rising, it's a parabolic rise, no problem. Then from here to here, market again fell. Again people were talking about market crash, that started to happen. You see, started to happen from 20th October 2021, and the market went down to approximately 12%, 12.5% or so, between a period of 20th October 2021 to 23rd December 2021. Again market was crashing. There was a lot of hue and cry. All the news channel you were saying the same thing. Then again you see from this point onwards, Nifty rose by how much point? Nifty rose by how much point? You see, it rose by around 12%. All right, it rose by around 12%. Now from the recent peak, by how much points the Nifty has fallen down? You see, it has fallen down by merely 7%. And still people are crying out loud, market is falling down, market is falling down. It means nobody is asking why the market is going up, but everybody is doubting that the market is falling down. Remember one thing, 10, 12, 13% fall in market, it is simply a correction, it's a retracement. It is not a market crash. So market is not crashing. Yes, if the market falls down to this point or this point, it means if the market, suppose breaks this particular support, it comes down here. If it comes down here by 15%, still I would not suggest that the market is crashing. All right. If it further goes down, then we can have a little bit of negative sentiment, but trust me, the market is not going to fall this much. And if it falls, it's a good opportunity, because remember, after every big fall, there is always a big rise. So need not be worried. For investors, this is the right time to purchase many stocks. Let's take a look at Bank Nifty chart. And Bank Nifty chart. So I've already marked the high and the low point, you see here. All right. Let's again take from this point onwards, 30th December 2019. You see, from the market, no, let's take 17 from September 2019. You see, the market rose up, the Bank Nifty rose up by 21%. All right. And then the great fall came during the COVID crisis. You see, February, the market fell down from this point to this point. That was a 50% fall. This is a crash, you can say, no problem at all. But after a fall of 50%, by how much the Bank Nifty has risen up? So if I don't take into a small correction into consideration, you see the market gave up, it rose by 50%, it fell down, then again it rose up and it made a high. So basically market from 25th March 2020 to 25th February 2021, the Bank Nifty rose up by 122%. 122%. So same thing happened over here. You see, 16 February 2021, the Bank Nifty started to fall down. India VIX increased significantly. Sorry. You see, by how much it has fallen from here to here? It has fallen down by around 18%. All right, fallen down by 18%. But from this point onwards, by how much it rose up again? By how much it rose up again? It gave you a ride to the extent of around 35%. It made a new high. Then again, from this high point, the market again corrected, I would call it correction or retraced to this level. That it fell down by around 17-18%. And then it again took a pullback. So what is the length of the pullback? You see here, it rose again, it made a lower high, no problem at all. It rose up by 13%. So again, recently, what is the recent fall? What is the level of recent fall? And people are panicking again. You see, the recent fall, Nifty fell down to this level, but it could not sustain. It went up. So it has fallen down by merely 5%. Just hold on, a little more than 5% basically. Let me take the correct high. I'll take this particular high, and the market closed at this point. All right, it fell down by around 5.2%. So do you think 5.2%, even 10%, even if it falls to this one 11%, is it actually the market crashing? No, the market is not crashing. The market is absolutely fine. After every big rise, there is a small correction that happens. If there is a rise of 5,000, 6,000 points and the market falls down by 2,500, 3,000 points, that's simply a correction. The market is absolutely right. The market is absolutely doing fine. You take any particular stock, yes, some stock will fall more, some stock will fall less, but the thing is, eventually they will create a new high all the time. You see, ICICI Bank. Somebody asked me about ICICI Bank in a group. ICICI Bank, if I take the highs and lows here, just let me remove the drawings here. You see here, you see, it has fallen down by how much? By 22%. All right. Then it rose up by how much? It rose up around, it did not get the new high at this point, but it again, you see, it fell down little bit, retraced, and then from here, just hold on, from this point onwards, it made a new high. You see here, it went up to this point, rose up by around 40%. Then again it fell down. The ICICI Bank fell down by how much percent? If I don't take this high, falling high, and again it gave a pullback and again it fell back here, so it has fallen down by 18%. And after that again it rose up, it made a lower high. So you see, it has increased by 20%. So maybe it may fall down again, Recently, by how much percent it has fallen from its recent high? You see, from its recent high, it has fallen by merely around 4.5%. Alright, it may fall down further, no problem at all. It may fall by 13, 14%, 15%. That's a normal thing for a stock to fall down and correct by 10, 15, 20, 25, 30, 40% also. But it will eventually go up, that I'm sure about. Alright, and also remember one fact here. Since you are investing right now, you have just entered the market around 6, 7, 8 months back. That's you are panicking right now. Can you imagine if an investor would have purchased the stock in 2020? Do you think we will be worried if the market falls down to this point or even to this point? Alright, what about if an investor would have purchased the stock at this price in 2016, 157? Do you think the market price will come back to 157? That's not going to happen. So all you need to do is stay in the game. So today is your average price. Maybe maybe you may have purchased over here and you are incurring losses. No problem at all. If you hold your fort, then the market, what will happen? The market will keep making a new high, new low, new high, new low, new high, new low, new high, new low. It will continue to, and it will go so far away from your average cost price that this 10%, 15% correction is not going to matter. Since you have just entered the market and then the market has taken a corrective mode, that's why your portfolios are in red. But otherwise, the long-term investors who had purchased these particular stocks at a way lower average price, and they have been averaging by with every big fall, because you see the first time I purchased ICICI Bank was somewhere around in 2018 when my daughter was born. Alright, somewhere around this price. Alright, it went up. It came down to my lowest. I mean, it came down to below average price that I had purchased, but I did not panic because I knew that it is simply a panic fall and the market is going to go up. ICICI Bank is not going to shut down. And you see, now it has gone up to what? 800, 900 level. Do you think it will ever come down to my cost price? It's not going to happen. It is not going to fall down to 250 rupees. Right? So all you need to do is stay in the game. Stay in the game and the market will rise up again. The market is not crashing. There is a negative sentiment in the market. The Federal Reserve is tightening. All the FIIs are creating this panic because you see at a high point they will have to sell and book profit. So at a lower point they will again buy and again take the ride up, a new high will be created. So if you are panicking, you will never stay in the stock market. So this is not the time to trade, this is the time to invest. So good stocks, find out which are the fundamentally good stocks. The list I've already shared with you. You find out the stocks, find out the support and resistance and try to enter at that. If the price falls down, let's say for example for ICICI Bank, you can enter at this price or you can wait, and if the price falls down to this level, you see, to this level, just hold on. To this level you can enter the market. What is happening? Yes, to this level you can enter the market. If suppose after you purchase the price falls down, you can average a bit over here. So use only around 30% of your capital, you can again enter here. If suppose the market falls down again, then the next average will be at this point, around this point. So if a good stock is falling down, you're averaging, eventually when it rides up, the lowest stock purchase at the lowest point will give you profit, the other one will give you break even, and then when it creates a new high, all the purchases made at different points will start giving you profit. So this is not the time to panic. Bulls are hiding at the bottom. Remember, bulls are hiding over here. The moment the price will fall down, the bulls will come out and they will take the market up. So nothing to worry. Good stocks. Do not find any penny stocks and any fundamentally weak stock. I've shared the list with you. And remember one more thing. If the price of a stock is rupees 6,000 and you have only 6,000 rupees, please buy one stock. Because if that stock rises by 12-20%, which it is possible for a high price stock to reach 20%, no problem at all. You will earn 1,200 rupees on just one equity share. But if a price of a stock is 100 rupees, you can buy more stock You can buy 60 stock of 100 rupees at 6,000 rupees. But the thing is, it will take a lot of time for a 100 rupees stock to reach 120 rupees. That is 20% increase. So think in terms of percentage. If you have if you have 7,500 rupees, buy one Bajaj Finance stock which has fallen down, because if it rises, think in percentage terms. If it rises by 10%, you will make 7,750. If it rises by 20%, you will make 1,500 rupees. So buy good stocks. If you buy fundamentally weak companies, and once it starts to fall, it will become very difficult for it to rise. It will take like ages to rise up again. So only good, fundamentally good stock, the list I have shared with you. Do not think that it is very expensive. If you have less money, buy just one stock, buy just two stock, but it should be a fundamentally good company stock. All right. I hope this helps. We'll meet again. Bye bye. Take care.